Investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good to us. We're going to start out with the German DAX like we usually do. As you can see, that's a daily chart. That's a 3 drive to a top pattern. That's similar to the one that we've been watching in the Dow Jones, the Russell, the S&P, the NASDAQ. Well, not the NASDAQ. I'll go into that in just a minute. But the Dow just hasn't given up, folks. That's only 30 stocks, and actually it's only 16 of those that really count because they're all price weighted. But we've reached a very important spot here today. We got the Federal Reserve in here today. We're down 30-some handles in the S&P. Any move below 3620 in the 3620? Are you kidding me? 3920 in the S&P would signal that some type of a minor top has at least been put in, but we do those one at a time to see how that's going. I had several emails just before we came on the air here because I sent out a special yesterday to exit the gold position. And, what we were looking for was potential because of the Fed coming in here. There might be a little bit of a sell-off. We had a interesting pattern there. If you'll take a quick look at this, you'll see here that we were looking at this head and shoulders pattern that was lined up in the gold yesterday. In fact, today's St. Patrick's Day. This was earlier in the morning. And we actually exited at 1731. That's where we exited. And we did get up to 1736 last night. And then we went all the way down to 1721, which was an interesting spot to take a look at it. But we're going to wait and set through this Fed thing. The second reason for doing it was the fact that the GLD had, not GLD, GDX, the gold miner index, had made a slightly higher high, then backed off. And so we decided that because of the Fed coming in here, we just put a fail-safe buy in there, quite a bit lower in the gold to see if we get picked off, because we've taken pretty good money out of that, considering it moved $60. We took $72 out of it. So very happy about that. But, it doesn't always work that way, of course. Anyway, here's what I want to talk to you about, folks. The most important chart of the day, from my perspective, happened yesterday. And we were talking about it just a little bit, but we were looking at this potential head and shoulders pattern. And you'll notice that the 61% retracement on the right shoulder being far lower than the left shoulder, which is really correct. That has broken down quite a bit. So until we get above that 13,300 level in the NASDAQ, this is a complete head and shoulders pattern. Now, Andrew Lowe in his book, The Non-Random Walk Down Wall Street, where he talks about the market is chaotic, but when the chaos are non-random patterns, and head and shoulders pattern happens to be one that technicians have been following, since they've been able to look at charts. Now, if we look at Tesla, and we've looked at this several times over the past past few years, you'll take a look at this. This is where we were way back in February. We were bringing that to your attention, that we had that head and shoulders pattern. You had 20 days between the two shoulders. The head was halfway at 10. The right shoulder being sharply lower than the left shoulder, just like we're seeing in the NASDAQ. And then we had the market go down. And what we do over the last 5 days, we went up to the 50% retracement, and we were closing below the 38% retracement as of last night. I don't know where it is today, but that's what we're looking at here in that. That's what we're watching to see if this is the case. Now, the Dow Jones has not rolled over yet. We've had some rollover, and the Russell is starting to give up quite a bit. This morning, then it bounced back a little bit. But the S&P is, like we said, at a very critical level of that 39.20 level would be very, very important. So far, the low has been 39.24. That was the exact 78% retracement of the low we made on Friday. So that's another one that looks very interesting. So pay close attention to that. for your technical expertise. Okay, I want to share with you a couple of charts from our friends across the pond. One of them comes in. This happens to be the chart on the crude oil. You'll notice is that they're talking about, this is the very highly technical group, folks. They're very good at what they do. And they're saying if we break, we're going to get heading down towards 55 in the crude oil. And we believe that is certainly possible because we've been watching this one from a standpoint of a 4-hour chart. And it's Tesla is below the 382 again. Okay, thank you, Terry. I appreciate it. And you'll notice here that if we get below that 62.10 level, 55 is an easy one to hit because that's way down here without any trouble at all in the crude oil. Because that is there's that symmetry again that you're seeing in the head and shoulders pattern, just like you see it in the 3 drive to a top pattern. You have to have that symmetry, folks, in order for the patterns to be mathematically correct. Because if you don't, then you're just grasping at stars, and then you've been to astrology again, and then I'll really be confused. Speaking of being confused, and we're going to get this out of our way today because we got the Fed. Hopefully, we're going to have the Wolf Trader on today, Shane Smullian. He'll be on. Hopefully at the break. He's very busy today with the Fed being in there, but he's going to do his best to come on and share some of his information with you. Okay, now I wanted to mention to you about the old piggies. If you remember yesterday, we were talking about the live piggies and about the 3 drive to a top pattern. Well, boys and girls, the trains arrived. We're up here at 3 drives to a top here in the hogs. If you're going to sell them, you got to sell them when they're yelling and cry and buy them when they're crying. And now they're yelling. So you want to be selling. You got to be a stop above about 94.5. So you're risking about $600. But if it's right, it'll be a good one. That's all I can mention to you on that, because it does look like it's got a chance of having that happen. So keep that in mind. The other thing that we talked about over the last few days that I'm still working on, and it's really starting to unfold a little bit, and that is I think we're in the midst of a correction coming in, this large bull market in the grains, wheat, corn, beans, oil, meal. Well, not oil because oil's in the stratosphere, but the others are all getting ready to look like to make a nice correction, and we'll be ready for that correction when it happens. What we need to see is a nice ABCD lined up with a few Fibonacci numbers, and we'll have a pretty good chance to get in at a very, very low price. Very low price to me would be any time that we see any spot gold, July or December, July, particularly July gold. Stop it, Larry. If we see July corn below $5, in other words, $4.99 in July corn, I think that will be a very, very interesting spot. We're quite a bit above that now. We're about $5.55, and so we could easily lose 50 cents in corn without any trouble at all, given the situation that we have in some of these other markets. So we're watching it extremely closely, that's for sure. Boys and girls, everybody in the whole world is talking about the old bondolis today, and they should be, because this is where the pedal meets the metal. We are down in an area now in the bond market where it's got to be able to hold its level, and we are very, very close. I'm going to get this up here. We just broke $55 in the bonds, and we'll talk about that when we get back. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart of the spread between gold and platinum. As you know, we have students all over the world, and some of them give us some really great information. This young man does a great job over there, and he's been following the platinum market. That's his business. He also does some business in gold, but platinum is his thing, and he now believes that gold is going to start gaining on the platinum. So that's one thing that we'll be watching, because right now the platinum has been, ahead of the gold, but so far it's started to change a little bit, and now he's beginning to see if that's going to change. And we'll follow that spread. I don't trade spreads. I think I've told you my definitions of what a spread is. Spread is like a stick, boys and girls. No matter what hand you let go of, you still have caca on the other side. So get out of a spread as you put it on. So if you put a spread on at the market, take the spread on at the market. Don't try to leg out of the spreads. Not very good. By the way, this is a very historical day in the old Pesavento household. It was about 30-some years ago that my young daughters were going to Malibu every weekend to apply for a job as extras in the new series that was coming out about a bunch of beach bums, and it was called, what was it called? Baywatch. Is that what it was? So I had to take them over and, do the tryouts and all that stuff. And by golly, they were looking for extras for Mitch Buchanan, David Hasselhoff. And my kid said, Dad, you should do that because you look just like David Hasselhoff, who's about 6'3". And so one of the things you had to do was you had to go out and prove that you were a good lifeguard. So you had to drag this 140-pound dummy and swim with it for a half a mile there and a half a mile back. 1 mile. And there are guys that were out there doing it. I finished in the top 5, boys and girls, believe it or not. And I was on the list to be an extra for him as a stand-in. I waited for 9 years, and they never called me. Evidently, I'd given them the wrong number because that's the only reason I think they wouldn't have called me. But anyway, it was fun going over there and see all those young kids back in the days when it was really a nice place to. It's still a nice place to go, but not nearly as much as it used to be. Used to be able to drive from Westlake Village to Malibu to the Malibu beach in about 15 minutes. It was on a windy road. So anyway, it was a lot of fun. Okay, let's move on to a couple other things that are very, very important in here that I think are important. You see a lot of these things on the internet now, folks, where people are talking about these trend lines and all this stuff of where the markets are reaching extremes, and maybe they are, maybe they're not. But these patterns, folks, they're not about predictions. Sure, they do some predictive value, but the real prediction is how much you have to risk to see if you're going to be right or not. That's all you have to do. That's what the whole key is. I mean, today's low in the S&P 500 was an exact to the tick at 39.25, was an exact 786 retracement, and we've rallied 14 handles since that time. So those numbers are still active. Until that market goes below there, the trend hasn't even changed, and the Dow still looks strong. I mean, it still looks strong. The Russell is weakening a bit, but the others are okay. Now, let's get to the pedal and the metal and see what's happening in the kettle. Here is what we were talking about in the newsletter over the weekend, is to pay very close attention to this, and we mentioned this on Monday, that we had the 61% retracement of this NASDAQ up here at this. I mentioned it before, but I've got to bring it to your attention again because it's that important. Because if we get above that, that tells you that this head and shoulders pattern has been broken and this market's still going to go higher. So I just have to warn you, because when they fail these patterns, they go on to the next level. We've seen this over and over again. So that's the main thing that we're doing. On an open interest thing with the bonds, folks, they have the bonds in such a bad situation that they're bound to rally. And hey, maybe they won't. Maybe they go to 149, which is the ultimate target here on this move downward. But we are at an area, as I pointed out on that long-term weekly chart that I just posted there. You see that was done a week ago. Actually, Sunday night was done on Friday night, Saturday morning, but that was at 155.24. We're now a full handle under that, which is not unusual because the market is extremely bearish and open interest is increasing. So shorts are increasing their short positions as the market goes down, adding to winners. And so that market is in a big thing. But with the Fed in there today, it's very, very oversold. So you could see a snapback rally in that without even, it could be even could be historic. You don't know. But you got to be really careful whenever the Fed's out there, because, they carry a big stick, and it's a big, big stick, and you don't want to stand inside of it. Now, that's a main thing to remind ourselves that's what we're watching as we walk through here. Okay, I wanted to talk just a tiny bit more about the situation that we have going in the, hold it, where is that chart? Oh, no, don't tell me we lost it. Oh, no, here it is. This is the Apple from yesterday. This is what we were bringing to your attention yesterday about Apple. Now, I drew in the pattern here because the 382 came in at 127.68. The high was 127.12. I think we're a little below that tonight. I think we're trading a couple of bucks below that. So until we can get Apple above that 128 level, it's going to be very hard for it to rally. Remember now, folks, Apple has been in a major 6-week bear market. From 145 down to 116, that's a big bear market in the most widely held stock in the world, and so that's telling you that somebody's not liking Apple. Why the reason is, I don't know. So we'll see. Yeah, well, Bob, that's where it was. Luckily, yesterday it was right at that point, but it doesn't always work that. Where's it trading at today, by the way? I haven't checked Apple this morning. I just wondered what it was trading at today. I'm more interested in seeing what the Fed's going to do, or how the market's going to react to what the Fed does today, because it's going to be real interesting to see how that works out. Okay, that's it's down quite a bit. That's quite a bit. What, $5? Whew. Yeah, that's a lot. It's what, 2.5%. Okay, let's. Any other questions, folks? 877-927-6648. We'll be happy to, do this. By the way, I really, really need this late start, folks, because it's such a big help to me getting everything ready. Because most of the stuff happens in the first hours of the morning, and when I'm on there at 9 o'clock in the morning, it is really tough. But now at noontime, it's a whole lot better for me. So I'm really really thankful that TFNN was able to work it out, especially to Basil Chapman, because he was kind enough to trade with me, and it worked out good for him and also good for me. So it's going to be very, very important in going into the future, because we hope to get our we basically the only thing we have going on right now is we're short the euro, and we are out of the gold market looking to rebuy it. We got a big order down there today. Setting at it, but you'll notice here in the euro, this is one that we will be trying to cover the euro position if we get down here. This 118.90, we're trading about 119.21 right now, and with the Fed in there today, that's nothing. And then you got to put a 30 pip stop on it, because if you're going to reverse your position down here at the 118.90 level, you got to put a stop in, because only 30 pips away is the 786, and below that is the tunnel with the funnel. We'll be right back. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have a lucky winner on the call-in line today. He wins a brand-new Mercedes-Benz 134 scale, of course. Roberto from Kansas City. How are you, my friend?
I'm doing well. What color is my Mercedes?
Any color you like, other than black.
Ah,
They look
All
too
right.
much like a hearse. What's up, buddy? What can I help you with?
do you have time to look at the Hang Seng this morning?
Yeah, sure I do. Yep, that's one that I have in the pocket. Yeah, just a second here. Hold on. As a matter of fact, I think I have the Hang Seng was really an important one. Just give me 1 second to get it up here. I know where it is. It only takes me a minute, and I just have to pull it up here because we've had a heck of a move in that, and we have so many good friends over in the Far East. And let's just move this over here. What did I do with it? There it is right here. We're going to look at it on a weekly basis for you because I think that's the best thing to look at it. It gives you a really good idea what's happened and what's coming here in 1, 2, 3, and here it is. By the way, happy St. Patrick's Day to everybody. They dye the Chicago River green today where the boys are out drinking their green beer. And, boy, you don't want to be caught driving today because, boy, oh, boy, everybody in Chicago that has a blood level under 3.0 doesn't get arrested because it is one party animal. Let's get to the Hang Seng here. We had a high up there at 31.5. Okay, now we're trading at 29. That was an exact 786, spot on to within 100 points, Robert. So we know that that's some type of a major high.
So you're thinking that that was a major high, like on February the 18th?
Yes, sir. I sure do. Yep.
Okay. All right.
And it broke out perfectly. It rallied from 27.5 up to 31.5, and now we're trading at 29. And that's an important thing here because, we've been down about 6 or 7 weeks now, and it hasn't given back very much, so it's still quite positive. But I wouldn't sell it here. I'd wait to get a little bit of a rally to sell it. But that's what I would be watching here to see if it's going to be working.
Where would you anticipate that it's
30,300.
No, not short selling it, but buying it at a low.
Oh, the 27.5 would be the 382 retracement, and that's where the original breakout started.
Got it. Okay. Well, thank you. I appreciate it.
Okay. Boy, folks, today is our lucky day because on the line and in the house is our favorite guy next to Mickey Mouse, Shane Smolian. Shane, how are you today?
Good afternoon, Larry. How are you doing?
Medication is a wonderful thing when you have allergies, isn't it, buddy?
Absolutely.
No,
absolutely.
I'm just in a really good mood today. That's all. What can I? Thanks for being on, by the way. And the reason why I asked you to come on is because we have the Fed today, and they are going to be probably rocking and rolling. What do you see so far this morning? Are they doing anything exciting?
Well, I usually like to close out a lot of my positions that are sensitive to stops. Okay, around the Fed meeting because you're going to have these wild markets. So. My guess is they're going to put some language in there about the bond. They're going to continue with the bond purchases right around $120 billion a month. But what's really going on that I care about is what's going on behind the scenes. And I talked about this before with your viewers that on March the 1st, the Fed really changed what they were doing. Like they're setting these intraday records now with what they're doing. And so that's changed the whole dynamic of the S&P because it puts us into what I call a super bull mode. Because the Fed is all in at this point, I really feel like that we are just really headed for an ultra bullish scenario going forward. We have the stimulus now that is signed into law. The checks are coming out. The Fed is printing all-time records. And we know that we have these retailers that are in an all-in situation on this market. So this slide here shows the number of retailers that are in the market. And because you have this printing of money and because you have this excess liquidity, I think that this is not necessarily a bearish counter trends example. I think it's more of a bullish example. So I think that we're setting up for what I would call the potential for a super bull. And I'm going to show you some charts here in a minute. But keep in mind that when you see these commodities doubling, tripling, quadrupling, Bitcoin, it follows that the S&P's, it's not out of reason to think that the S&P can do the same thing, particularly when we have this much money coming in. So I talk about the concept of the Skynet, that the Fed really changed what they were doing. So on this chart, you can see on the left, this green box over here is what the Fed was doing during COVID, and I thought that was a lot. And then they completely changed the game in late October, and so I call it, I know Joe DiNapoli called it Skynet 2, but this is what I would call that the Fed's really taking over here. I'm going to show you a next slide here, which is going to show a purple box, which is going to show what they've done just since this slide. So you can see here's the purple box. The Fed is they're all in. They're trying to make sure that this stimulus is a success. The market can have success here going forward. So we've really never seen this before in terms of the amount of muscle that's coming in. I think we're setting up, Larry, for a super bull market. It would not surprise me to see the S&P double or triple here in the coming year, probably next couple of years. I just think that there's so much coming into this market that, price almost just does. I mean, at this point, if you're just looking at saying it's high, it's got to go down, you have to look at what's happening behind the scenes, particularly with the Fed, okay, and then the stimulus also coming in. I have another chart here that I'm going to show, which is the weekly chart of the Fed use. So you can see that this is a chart here, the labels A and B. These are what I call the important lows. This goes back to 2016, and this was a low in terms of the Fed use versus S&P. But now we hit another important low here during the COVID, and you can see here that there's really no reason to think this is just kind of in the line of the progression higher. And so, what we're seeing here is I think we're seeing a super bull. We essentially saw the market rally with a ghost economy, with basically a nation shut down, and this market completely rallies. And now you have the economy's coming back online, and you have full backing from the government. You have all this stimulus. I think, and again, I'm just going to tell you, it's not out of reason to think that this market could double or triple at this point. Now, why do I say that? Well, there's a couple reasons. One of them is the inflationary argument that's coming in. The other one is, if you look at these technicals, I'm going to show you a chart here. So I don't want everybody to freak out. I'm just showing you a potential here. If it follows the progression here, you have a bull market with trend lines that are increasingly getting more and more steep. So I'm going to show you a chart here, which I would call the super bull scenario. This is an S&P weekly here. So what this chart does is I tracked the trend lines. And so each time the S&P is making a new leg higher, the trend lines are getting steeper and steeper and steeper and steeper. And so I plotted a few Fibonacci extensions out here, okay? So what I did was I projected these trend lines out to these extension levels, and they all kind of come out into late 2023. And I'll get to this when we come back.
Okay, folks, we'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, we're back, and we're talking with Shane Smolian. Shane, I had a question. As you said, don't get freaked out when you give me those numbers. What happens if you're already freaked out? Boy, that's really something.
Tricky with the stimulus. But I just think that, look, all that I'm telling you is if you're seeing all these commodities double and triple, why is it unreasonable to think the S&P could do it? Now, it could follow any of these paths higher. I mean, I have these hitting these Fibonacci extensions up into here. But why? I mean, why not? I mean, if you double, you're only up to 8,000. I mean, I think it's reasonable. I think we need to pay attention to the fact that these trend lines are each getting steeper and steeper. And the most impressive thing is this last one came during COVID. So as a market technician, you should pay attention to this because these are the signatures of a super bull. And I think you have the Fed there behind you. I think you have the inflationary pressures coming in. So don't be surprised if we, in a couple of years, if the S&P is pushing up into these levels, or even it could go all the way up to 9,000. I mean, I think it's reasonable, and it's just following the current trajectory, right? So there's nothing here that's telling us that it's getting weaker. It's just on a weekly time frame, it's still getting stronger and stronger. And again, the Fed is still there on the weekly time frame supporting this market. So I just wanted to point that out. I'm more in this camp now. I'm more in the camp that we're going to see this massive bull for multiple reasons. I think the economy is going to come back online. I think everybody's rested. If you look at certain sports, I follow track and field, but I'm gonna do a presentation on this. But multiple records are starting to fall in track and field.
Track and field.
Yeah, this is athletics in Europe.
That's not a sport. You can't bet on track and field.
This is athletics in Europe for our European listeners. But multiple records are following. Multiple records are falling all the way from Europe to Africa to Japan. Why? Because people are rested. And I think people are rested and they're going to come back into this economy, and I think we're going to have a really nice move, or it's a possibility. I mean, I don't see why, unless we get some type of a collapse here, I think that's the possibility. Now, this is the March forecast. Now, Larry, I've had a big game change in the last week. I've actually figured out how to put my planetary speed index and solar cycle and Cat Master, my Astro, onto the charts now. So we can actually look at these overlaid to see where we're going. And this is going to give us a lot of forecasting power going forward for the subscribers. So, for example, I can now take these models and further optimize them to see where we're going to go. Now, at the beginning of the month, I talked about that we were hitting this low into here, and we would hook higher into the late month. And we're pretty much following that path right now. I know it's down today, but we still have the Fed meeting. And I was just using a very simple measurement of peaks and troughs on this market. But I really feel that this market could go up all the way out into, this could go out into April before we see a pause, I think. I think the potential is there. If you look at all the cycles together, that this thing could just be going higher, because I think because these checks are coming, we're probably just starting. Now, this chart here is the S&P Fed use 4.0. Now, the big game changer that we had with the Fed is I'm able to track the internals now. So if you look at this blue arrow, which I'm going to circle here on the chart, those are the internals. That's what you want to watch. So right now that's been in a buy, and those have tracked the market pretty much almost perfectly. I mean, there's a few bars where it can lag it, but essentially once those internals change, the market tends to change in that direction. So this is really a measurement of the operations of the Fed. We're still in a buy on this. Now, if this goes into a sell, I could see the market maybe pausing a little bit, but I still feel like overall we're in some type of a mega bull here. I when I look at those weekly charts, I can't. I mean, I don't see anything there. I mean, if we are coming into a blow off top, I still think there's room for this thing to go higher here. So those internals are still higher right now as we go into the Fed meeting. Today is a very unpredictable day. So on the short-term trades, I don't really like to be messing around with the Fed. The dollar juice, we look at how the S&P reacts to the dollar. That's still in a buy. You can see that's headed higher. So really on pretty much all cylinders here, we're firing, and I just feel pretty bullish about this. Now, let's take a look at the bond. Because I actually have here now, like I said, I can put the solar cycles on top of these charts. And you were talking about the fact that the bond was really beaten up, right? It's really beaten up, so it's so low right now that it just might get a bounce. Yeah, might get a bounce because it's beaten up. But let me show you the solar cycle here. So now when we have our charts, we can actually start to see what is the expected seasonal pattern here. And so the expected seasonal pattern is for the bond to start to come off the lows here. And if you look down here at the RSI, we're actually getting a very positive divergence here in the RSI. So we're getting positive divergence in the RSI. We're getting the solar cycle here. And so I think there's a chance here that we could start to see some type of a low. Now, how much of a low is that? Is it going to be a shallow low and head back down, or is it going to be a strong bounce? I think a lot of that's going to depend upon what the Fed does and says. But I think I agree with you, Larry. I think we're pretty beat up down here on this bond. So I think, having the vision of this solar cycle now on top of the charts, it really helps us. Now, I'm going to show you a chart of the U.S. dollar next. So this is the dollar with the solar cycle on top of it too. So what we'd expect this time of the year, we would expect the dollar to start getting weaker into April. So that could start to lift other securities. It could start to lift gold. It could start to lift, give a further push to the S&P. So if this does have any appreciable decline here, and we have not seen this yet because, with the stimulus, we would have expected the dollar to decline, but maybe that's already priced in. But it's still possible that this could fall further. If this follows the solar cycle down, I think you could get a further lift in multiple assets, multiple securities going forward. So that's the dollar pattern. We'll take a look at oil here. So this is oil with the solar cycle here. And again, for the subscribers, I have the specific dates on there. But you can see here that oil has pretty much followed the solar cycle higher. And you can see once this solar cycle makes a high up into here, once it makes this high, the market essentially flattens out. So the rally flattens out, but we are coming into a bottoming portion into here on oil. So oil could start to get another lift up and make another leg up here, according to the solar cycle here at least. And again, this is so nice that we can see these two properties interact like this. Now, one of the things about this that I like to talk about is the difference between what I call a print high and a cycle high. So when you're doing cycle analysis, one of the things to understand is that sometimes markets, the actual high of a cycle can occur at a lower high. So for example, this is oil here, and I'm showing an example of the solar cycle in green here, okay, versus oil in the black here. And so the print high, this is going back, this is earlier this last year, okay? So this is the print high here on oil. So it actually makes the peak is here, and it starts to trend lower, right? So the interesting thing about this is the solar cycle is still headed higher, right? So oil is making a negative divergence to this solar cycle. So this is the importance of understanding what a cycle high is, because the print high was here, it's starting to fail into the cycle high. And then once you hit this cycle high here, you would expect it to accelerate even faster lower, and that's exactly what you get here. So a lot of times we need to understand that the way the market is behaving into those highs is just as important as the highs, the cycle high itself.
Oh, this is really interesting. I really like that cycle high stuff. Hey, to stay with us to wrap up the show here in just a few minutes, Shane, if you would, please.
Sure.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks, talking with Shane Smolian, thewolftrader.com. Shane, you want to tell the folks how they could reach you?
Sure, Larry. You can go to my website. It's wolftraderfutures.com. And it's www.wolftraderfutures.com or www.fedjuice.com. You can also reach me on Twitter. I have a free Twitter account at wolftrader, FUTU1, or the YouTube channel. Now, this is an important one because I'm starting to post more live streams again. So it's Wolf Trader Futures, and you can go there and check out. I'm putting like 3 live streams up probably about once a week where I answer questions for subscribers and for any new people. And most of these streams are pretty long. They're about over an hour long, maybe hour and 20 minutes, something like that. So you can go to the site and chat with me too. On the website, Wolf Trader Futures, there's an actual chat portal where you can talk to me, and if you have any questions, I can answer any questions. If you want to just ask questions about the service or just general questions, it's really cool because it's like an instant message type of a deal. You can chat me or Shane@wolftraderfutures.com. You can email me there, and I can email. That's probably the easiest way, because I can get back to you at some point.
Wow, that's really good. Hey, thank you for being on our show today and scaring the bejeebies out of the old cowboy. But that's okay. I get scared a lot. I get scared a lot these days, but I certainly, nothing would surprise me. In these days, you see Bitcoin go from 100 to 60,000, anything could happen.
And again, Larry, I just say, look, copper's doubled, oil's doubled. I mean, why not the S&P? I mean, we're right in the middle of this Fed stimulus, and people, you have to understand, $2 trillion, $600 billion, $2 trillion. I mean, these are huge numbers. These are huge inflationary numbers. So I just don't think it's outside the realm of possibility. I don't know if it's going to go to 9,000, but if it keeps on its current trajectory, it could be up. It could be hanging out around that level, 7,000, 8,000 in a couple of years.
Wow, that's awesome. Listen, have a wonderful day, my friend, and be safe, and may God bless, and may the Fed be on the side of where the wind blows.
May the Fed be with you. May the Fed be with you. Thank you.
Okay, folks. We'll see you all tomorrow.
Take care. Thanks.